BMW is recalling more than 720,000 vehicles due to an issue with the water pump's electrical connector that could potentially lead to a fire.
BMW just dropped a bombshell that no one saw coming, and it's shocking everyone. For decades, BMW has stood as a beacon of luxury and precision engineering, setting the gold standard for what a premium car should be. But now, this automotive icon is facing a crisis of epic proportions. A massive recall of over 1.5 million vehicles, a plummeting stock price, and financial fallout have sent shockwaves through the industry. What was once a symbol of unshakable quality is now grappling with challenges that could redefine its legacy. How did BMW's shocking announcement trigger one of the largest crises in its history? Is this the bold move that will secure its future, or the beginning of a downfall that could reshape the entire car industry? And how is it going to affect you? What's happening? BMW's reputation for impeccable engineering is under fire as the company grapples with a global recall of over 1.5 million vehicles. The issue, a faulty integrated braking system that compromises safety. While BMW insists that the risk of total brake failure is minimal, the system's safe mode requires drivers to press harder on the brake pedal than usual, a disconcerting reality for those behind the wheel of a luxury car. The recall isn't just a technical problem, it's a crisis of trust. BMW has built its brand on precision and reliability, but this recall calls into question its commitment to quality control. The faulty braking system was flagged during an internal review over 2 years ago, but it took until now for the company to act decisively. For many customers, this delay is not only unacceptable, but also emblematic of deeper issues within the brand's operations. For a company that prides itself on delivering the ultimate driving experience, this misstep threatens to tarnish its reputation. Luxury car buyers expect excellence, and anything less is a betrayal of their trust. As BMW navigates this crisis, the challenge will be not only fixing the issue, but also repairing the damage to its carefully cultivated image. Financial fallout. The financial implications of this recall are staggering. BMW estimates that the braking system issue will cost the company nearly 1 billion euros in the third quarter of 2024 alone. This high three-digit million euro charge, as BMW's corporate statement described it, highlights the severity of the situation. Add to this the cost of halted deliveries and mounting dealership inventory, and the financial strain becomes even clearer. Of the vehicles affected, 300,000 remain unsold, sitting idle on dealer lots. These vehicles represent both a logistical headache and a financial burden. While BMW can fix the issue before selling these cars, the backlog creates the illusion of healthier sales numbers than reality suggests. It's a double-edged sword that further complicates the company's ability to project confidence to investors. Stock prices have not been spared either. After the recall was announced, BMW's shares plummeted by 10% in a single day, sending shockwaves through the market. For a company with a market value of over $50 billion, this represents a significant loss of investor confidence. As BMW struggles to contain the fallout, questions remain about its ability to recover and regain stability. Outpaced by Tesla. While BMW deals with the logistical and financial chaos of its recall, its competition is exposing the inefficiencies of its traditional business model. Tesla's direct-to-consumer approach bypasses dealerships entirely, allowing the company to address recalls and technical issues with unparalleled speed. In contrast, BMW's reliance on third-party dealerships slows everything down, from diagnostics to repairs. This outdated system has left BMW vulnerable in an industry where speed and flexibility are paramount. Tesla's ability to adapt quickly to issues and communicate directly with customers underscores the gap between the two companies. BMW's delays in addressing the braking system problem highlight the disadvantages of its traditional dealership model, especially in a world where customer expectations are shaped by companies like Tesla. The broader implications are clear. BMW's struggles to compete with Tesla go beyond product offerings. It's a battle of systems, and BMW's inability to modernize its operations is becoming a liability. If the company wants to remain competitive, it must find a way to streamline its processes and meet the demands of a rapidly evolving market. Precision gone wrong. BMW's reputation for impeccable engineering is under fire as the company grapples with a global recall of over 1.5 million vehicles. The issue, a faulty integrated braking system that compromises safety. While BMW insists that the risk of total brake failure is minimal, the system's safe mode requires drivers to press harder on the brake pedal than usual, a disconcerting reality for those behind the wheel of a luxury car. The recall isn't just a technical problem, it's a crisis of trust. BMW has built its brand on precision and reliability, but this recall calls into question its commitment to quality control. The faulty braking system was flagged during an internal review over 2 years ago, but it took until now for the company to act decisively. For many customers, this delay is not only unacceptable, but also emblematic of deeper issues within the brand's operations. For a company that prides itself on delivering the ultimate driving experience, this misstep threatens to tarnish its reputation. Luxury car buyers expect excellence, and anything less is a betrayal of their trust. As BMW navigates this crisis, the challenge will be not only fixing the issue, but also repairing the damage to its carefully cultivated image. Challenges beyond the recall. BMW has long relied on its extensive leasing program to make its luxury vehicles more accessible, particularly in Europe and the United States. Leasing allows customers to enjoy high-end cars without committing to the hefty long-term costs associated with ownership. In fact, an astounding 89% of BMWs in the United States were leased in the first quarter of the year 2024. However, this model is starting to show cracks. One of the biggest challenges is the dropping residual values of leased electric vehicles, which are the projected resale prices at the end of a lease. Oversupply and slower than expected adoption rates are driving these values down, particularly in markets like Britain and Germany. This presents a significant risk to leasing companies that depend on these resale values to recover costs. With electric vehicle prices declining, leasing electric vehicles becomes less profitable, potentially leading to higher leasing rates or fewer leasing options altogether. For BMW, a brand heavily invested in leasing, this trend threatens to erode a key pillar of its business model. While leasing has helped drive the adoption of electric vehicles across Europe, the economic pressures tied to this strategy are growing. For BMW, the challenge will be balancing its reliance on leasing with the need to remain profitable in a market that is shifting faster than its traditional structures can handle. A history of recalls. The integrated braking system recall is not BMW's only problem. Just weeks before this latest crisis, the company announced another recall, this time affecting over 700,000 vehicles due to water pump malfunctions. The issue, which could potentially cause fires, has only compounded BMW's mounting challenges. While the company quickly rolled out fixes, the sheer number of vehicles involved underscores the scale of its quality control problems. These repeated recalls are not just logistical challenges, they also have a profound impact on BMW's reputation. Customers expect a luxury brand to deliver impeccable quality, and frequent recalls erode that expectation. Moreover, the financial costs of addressing these issues are staggering. Fixing millions of vehicles comes with a price tag that eats into profits and diverts resources from other priorities, such as innovation and production. As the recall numbers climb, BMW faces the difficult task of rebuilding consumer confidence. For a company that markets itself as a leader in precision engineering, these setbacks are not just financial, they strike at the very heart of its brand identity. Pressure from the competition. While BMW grapples with its internal issues, external pressures are intensifying. Tesla continues to dominate the electric vehicle market with a direct-to-consumer model that allows it to maintain high residual values and respond quickly to market changes. Tesla's agility has left traditional automakers like BMW struggling to keep up. Adding to the challenge is the growing presence of Chinese automakers in Europe. Brands like BYD and NIO are flooding the market with competitive electric vehicles at lower price points, forcing European automakers to rethink their strategies. For BMW, which has historically relied on its premium pricing and brand loyalty, this competition presents a significant threat. Meanwhile, dwindling demand in China, the world's largest automotive market, has further impacted BMW's sales volumes. Despite government stimulus measures, sales in China remain sluggish, putting additional pressure on the company's bottom line. BMW's struggles in China highlight the broader challenges faced by European automakers in adapting to an increasingly global and competitive market. Shrinking margins, growing concerns. In response to these mounting pressures, BMW has slashed its 2024 earnings forecast for its automotive segment. The company now expects profit margins to range from 6 to 7%, down from the previous projection of 8 to 10%. While this may not seem like a significant drop, it represents a 30% reduction in shareholder net income, a blow that investors are unlikely to ignore. Additionally, BMW has lowered its expected return on capital from a previous range of 15 to 20% to a more modest 11 to 13%. These adjustments mark one of the toughest financial years for BMW in recent history and highlight the severity of the challenges it faces. For BMW, these shrinking margins create a precarious situation. The company must find ways to cut costs and improve efficiency without sacrificing the quality and luxury that define its brand. This balancing act will be critical as BMW navigates an automotive landscape that is increasingly defined by disruption and competition. Electric vehicle bright spots. Despite its struggles, BMW has demonstrated significant growth in the electric vehicle sector. In the first half of the year 2024, BMW reported a 34% increase in battery electric vehicle sales compared to the previous year. The company sold 179,000 battery electric vehicles during this period, representing 15% of its total sales. This is a commendable achievement, especially in an industry where traditional automakers are still working to establish a foothold in the electric vehicle market. BMW's electric vehicle success is due in part to its diverse range of offerings. Models like the BMW iX and i4 have been well received, offering luxury, performance, and cutting-edge technology that resonate with both new and loyal customers. Unlike some competitors that focus on a narrower segment of the electric vehicle market, BMW's strategy of providing options across multiple vehicle categories has helped it capture a broader audience. However, challenges remain. BMW's electric vehicle sales are still outpaced by Tesla, which benefits from high residual values, a direct-to-consumer sales model, and economies of scale. While BMW's 15% electric vehicle penetration is impressive compared to Toyota's meager 1%, it still falls short of the market leader. BMW must now find ways to accelerate its electric vehicle growth while addressing the broader challenges that threaten its overall business. Strategic partnerships and the hydrogen gamble. In an effort to diversify its approach to clean energy, BMW has partnered with Toyota to develop hydrogen fuel cell vehicles. This collaboration, announced earlier in the year 2024, aims to bring a hydrogen-powered vehicle to market by the year 2028. The partnership leverages Toyota's existing expertise in hydrogen technology, showcased by the Toyota Mirai, and BMW's engineering prowess. Hydrogen fuel cell vehicles are often touted as a potential solution for long-range driving and heavy-duty applications where battery electric vehicles face limitations. However, the market for hydrogen-powered cars remains niche, especially in regions like the United States where hydrogen refueling infrastructure is sparse. Sales of hydrogen vehicles in the first half of the year 2024 were dismal, with only 322 units sold in the United States, a staggering 82% drop from the previous year. Critics, including Tesla's Elon Musk, have been vocal about the challenges of hydrogen as a fuel source, dismissing it as impractical for passenger vehicles. The high cost of hydrogen fuel and the complexity of building a robust refueling network add to the skepticism. Despite these hurdles, BMW remains committed to exploring hydrogen technology as part of its long-term strategy, banking on advancements that could make it a viable alternative in the coming years. This partnership with Toyota reflects BMW's willingness to experiment with diverse technologies in the face of an uncertain future. While hydrogen remains a controversial choice, the collaboration could yield innovations that extend beyond fuel cells, potentially benefiting other areas of BMW's business. Revising operations for the modern market, BMW's operational inefficiencies have been a recurring issue, particularly as the company struggles to adapt to a rapidly changing industry. The recall of over 1.5 million vehicles due to a faulty braking system exposed gaps in BMW's quality control processes, but the company is taking steps to address these shortcomings. One such step is the development of advanced diagnostic software capable of identifying potential issues before they escalate into larger problems. This software was a critical component of BMW's response to the braking system recall, allowing the company to detect faults and notify drivers to seek repairs before experiencing performance issues. While this is a positive development, it underscores the importance of proactive measures to prevent quality issues in the first place. BMW is also investing heavily in production efficiency. The company's joint venture, Blue Oval SK, recently secured a $9,630 million loan to bolster its electric vehicle battery production. By building out its battery supply chain, BMW aims to reduce reliance on external suppliers and lower production costs. These investments are crucial for improving the company's margins, particularly as it seeks to expand its electric vehicle lineup. Another focus for BMW is improving the speed speed and efficiency of its recall processes. The reliance on third-party dealerships has been a significant bottleneck, delaying repairs and frustrating customers. BMW is exploring ways to streamline these operations, potentially by integrating more direct communication and service options to bypass traditional dealership networks. Expanding global reach amid challenges. BMW's global strategy is critical to its recovery efforts, particularly in key markets like Europe and China. In Europe, BMW has faced stiff competition from Tesla and an influx of Chinese electric vehicles that offer competitive pricing and advanced features. Despite these challenges, BMW managed to briefly surpass Tesla in European electric vehicle sales in July of 2024, selling slightly more units than its American rival. However, this achievement was short-lived and partly influenced by Tesla's production and shipment schedules. The European market is also undergoing significant regulatory changes. Proposed tariffs on electric vehicles imported from China could reshape the competitive landscape, favoring domestic automakers like BMW. These tariffs, which add to an existing 10% duty on imports, are designed to protect European manufacturers from the growing dominance of Chinese brands. For BMW, this presents both an opportunity and a challenge. While tariffs could reduce competition from Chinese automakers, they also highlight the need for BMW to increase its domestic production capacity to capitalize on the shifting market dynamics. In China, BMW faces a different set of challenges. Sales volumes in the world's largest automotive market have been declining, despite government stimulus measures aimed at boosting demand. This trend is concerning, given China's importance as a growth market for luxury and electric vehicles. BMW's ability to adapt to local preferences and navigate regulatory complexities will be key to maintaining its foothold in this critical region. To strengthen its global position, BMW is exploring partnerships and production strategies that enhance its resilience. The company's investment in European battery production facilities and its focus on diversifying its electric vehicle portfolio are steps in the right direction. However, success will require a delicate balance of innovation, cost management, and responsiveness to regional market demands. The balancing act of recovery. BMW's efforts to recover from its recent challenges highlight the complexity of operating in today's automotive industry. On one hand, the company's growth in electric vehicle sales demonstrates its ability to innovate and adapt to changing consumer preferences. On the other hand, recurring recalls, financial pressures, and intensifying competition reveal the vulnerabilities of even the most established brands. The next steps for BMW will be critical. The company must address its operational inefficiencies and rebuild consumer trust while continuing to invest in technologies that ensure its long-term relevance. Whether through expanding its electric vehicle lineup, exploring hydrogen technology, or streamlining its production processes, BMW's recovery will depend on its ability to execute these initiatives effectively. For consumers, BMW's challenges offer a glimpse into the broader dynamics of the automotive industry. The transition to electric and alternative fuel vehicles is not without its growing pains, and legacy automakers like BMW must navigate these changes while preserving the qualities that define their brands. As BMW charts its path forward, the stakes are higher than ever, not just for the company, but for the entire automotive landscape. The tariff tangle. The European Union's recent proposal to introduce additional tariffs on electric vehicles imported from China has created a ripple effect across the automotive industry. For legacy automakers like BMW, this could either be a lifeline or another hurdle to overcome. With Chinese brands like BYD and NIO flooding the market with competitively priced electric vehicles, the tariffs aim to level the playing field by protecting domestic manufacturers. While the idea seems promising for BMW, it comes with caveats. The tariffs might reduce competition from Chinese imports, but they also highlight the need for BMW to ramp up its own production capacity within Europe. Tesla, with its Giga Berlin factory, has already sidestepped much of this issue by producing vehicles domestically, giving it a strategic edge. For BMW, failing to capitalize on this opportunity could mean falling further behind its competitors. The challenge lies in execution. If BMW can align its production capabilities with the changing market landscape, it stands to gain from these protective measures. However, the added costs of adapting to these shifts, combined with its existing financial struggles, leave little room for error. Tesla's shadow. Tesla continues to loom large over BMW, especially in Europe. The company's Giga Berlin plant has enabled Tesla to produce its vehicles locally, avoiding many of the logistical and tariff-related challenges that BMW is now grappling with. Furthermore, Tesla's ability to maintain high residual values for its vehicles gives it a clear advantage in a market where leasing plays a significant role. Tesla's dominance also extends to innovation. Rumors of new models being introduced in early 2025 have sparked excitement among consumers and investors alike. If these vehicles come equipped with groundbreaking technology or lower price points, they could further solidify Tesla's lead in the electric vehicle market. For BMW, competing with Tesla is no longer just about matching its vehicles. It's about catching up to a business model that prioritizes speed, efficiency, and direct customer engagement. BMW's ability to innovate while maintaining its luxury appeal will be crucial in staying relevant. The hydrogen gamble. BMW's partnership with Toyota to develop hydrogen fuel cell vehicles is perhaps its most controversial move yet. While hydrogen technology holds potential for long-range and heavy-duty applications, it remains a niche solution in the passenger car market. The lack of hydrogen refueling infrastructure and the high cost of hydrogen fuel make this a challenging path. Elon Musk, Tesla's chief executive officer, has been a vocal critic of hydrogen-powered cars, labeling them fuel cells. His skepticism is shared by many in the industry, particularly as battery electric technology continues to dominate. Despite this, BMW and Toyota are pressing ahead, banking on advancements that could make hydrogen more viable by the late 2020s. For BMW, the hydrogen gamble represents both risk and opportunity. Success in this venture could position the company as a leader in alternative fuel technology, offering a unique differentiator in a crowded market. However, failure could divert resources away from more promising areas, such as electric vehicle development, and deepen BMW's existing challenges. Reinventing BMW. The stakes for BMW could not be higher. The company is navigating an unprecedented convergence of challenges: safety recalls, competitive pressures, financial strain, and the need to innovate in an industry defined by rapid change. At the same time, BMW must remain true to its identity as a luxury brand while embracing the demands of a greener, more connected future. To succeed, BMW needs a multi-pronged approach, addressing operational inefficiencies, rebuilding trust with consumers, and investing in scalable technologies are all critical. Equally important is the ability to adapt to regional market dynamics, such as the growing competition from Chinese brands and the regulatory shifts in Europe. BMW's future depends on its ability to strike this balance. The company's legacy as a pioneer of automotive excellence gives it a strong foundation, but the road ahead will require bold decisions and flawless execution. What do you think about BMW's strategy and the challenges it faces? Can the brand reclaim its position as a leader in the automotive world, or are the obstacles simply too great to overcome? Share your thoughts in the comments below. We'd love to hear from you.